Hi everyone, this is AO Accounting Academy. Today I'll be discussing IAS 7 statement of cash flow. IAS 7 is effective I think January 1, 1994 for statement beginning from that period, and it requires entities to present historical changes in cash and cash equivalents in operating, investing, and financing activities. So, is one of the statements that focuses on cash as a basis, cash basis of accounting. If you look at statement of financial position and statement of profit or loss, both of them record transactions on accrual basis. You know, when you do expenses, you record expense when event leading to the expense has occurred, not when the cash was paid. That is under statement of profit or loss, and other aspect of statement of financial position. But statement of cash flows only deal with cash basis of accounting, to be able to estimate in terms of cash that was used for operation of the business, day-to-day running of the business, also cash that was used for financing activity, financing operations, raising funds for the organization in terms of equity and shares, and also equity and shares and loan as well. And also it also talks about aspect of long-term financing activities, financing of purchase of an asset or disposal of an asset, which are on a long-term basis. So the statement of cash flows focuses on those three areas, though the standard recommend two approaches, two methods, which is direct and indirect method. But for the purpose of this discussion, I'll be talking about only the indirect method. So I'm looking at all those three aspects of operating, investing, and financing activities. But before we do that, we need to also understand what cash and cash equivalent is. The standard defines cash as comprised of cash in hand and cash at bank or demand deposit. Those are, you can really maybe you have your cash in a wallet, or you have your cash at bank, you can really call for it, or demand deposit in the bank. And also cash equivalent, the standard defines it as short-term highly liquid investment. If you look at this place, short-term highly liquid investment that are readily convertible to known amount of cash and are subject to an insignificant risk of changes in value. So those are cash and cash equivalents. So let me now talk about those three aspects that the standard wants us to use to define or to prepare our cash flow statement. The operating activities, like I mentioned earlier, the short-term principal revenue producing activities of an entity. That is when you sell goods or services, it's expected that you run your business from time to time, you collect receivables from the sale of goods and services, and also sometimes you also need to make payment to your vendors. So those activities that fall within that category are called principal revenue producing activity, because they are short term. So that is operating activities. Investing activities, like I mentioned earlier, is also you are investing in long-term asset, like buying property, plant, and equipment, also disposal of property, plant, and equipment, or sometimes you can invest in subsidiaries, like investment in shares in subsidiaries, associate, and others. So those activities fall under investing activities. Financing activities are activities to raise finances for the organization, and this in any form would impact the size and composition of equity in terms of capital for the business, and also borrowings. So when you go to the bank to borrow fund, it will impact your leverage ratio, and also when you source for fund through issue of shares, so it will also impact your debt equity ratio. So those are the three activities that the cash flow statement, I mean in terms of IAS 7, that we need to follow. So let me now use a very simple example. I created one example here so that we can have it as an example to prepare our cash flow. So but if you look at it very well, most accountants, let me say that most accountants, they are scared in preparing statement of cash, because most of the time when they prepare it, it's not always balancing. It's not always balancing. I've had this issue before while trying to grow in the process of preparing a statement of financial position and other statement of profit or loss, and also preparing my management account. But from time to time, I've learned this skill over time. So I want to tell you that it's really simple. It's just for you to be able to understand the basic steps. So if you want to do this, the first thing we need to do is look at statement of financial position, and for me, I would say that that is the beginning aspect of preparing. So look at it from time to time. You are able to have a comparative figure in a period. You are doing this statement of financial position for 31 December 2023, but you also have a comparative figure. That is what will make it easy for you. So what I will do is I will prepare like a pro forma statement solution. Sorry. So pro forma statement of, let me see, pro forma statement of profits, no, statement of cash flows. So in that pro forma statement of cash flows, though the standard says that we should start from profits before tax, but I would say that I will start from profit after tax. I'm using the indirect method, don't forget, I'm not using the direct method. So I'm using the indirect method. So I will start from profits after tax. There's a reason why I'm doing that, so that I can capture all the processes from A to Z. Profit after tax. Then the next thing is for me to look at the relevant adjustment. Though I'm not making the adjustment on the first line, I'm making it on the second line. Adjust or add. There are some activities in the profit and loss statement, or transaction in the profit and loss statement, that require that you adjust back. For instance, you have your interest expense here. If you look at it here, interest expense does not mean that you have actually paid interest on loan. So what it means is that is an expense provision for the period. There's also interest income. Does also mean that, because you remember we said that statement of profit or loss or statement of financial position deals with accrual basis of accounting. So these are non-cash items, so we need to adjust them back. And also income tax expense. Also other categories of expense that we also need to be looking at is things like depreciation. Depreciation, I believe, will have been included here. So if you look at the notes that we have here, we have property, plant and equipment which was valued as 2.5 million, $2,500,000 was disposed of during the year 2023. Cash flow. Okay, that's not this. Okay, this one talks about depreciation. Depreciation on property, plant and equipment for the year ended 2023 was $1,500,000. So it means in this G&A, or general administration of expenses, we have included depreciation. So we need to adjust back. So what are those things that we need to add back? We have depreciation. Let me take depreciation first. The next thing that we need to adjust back is interest expense. The next thing that we need to adjust back is income tax expense. I'm looking at the expenses for now. I'll look at income later. So income, I need to less interest income. So that's my pro forma from the top. So I would say these activities are operating activities. That is, let me say, cash flow from operating activities. So the next thing is to look at the movements in working capital. Is still under the like I mentioned earlier, operating activities also involve payment to vendors or receipt from debtors, receivables. So those activities. So what I will now do is I'll go to my balance sheet here, my statement of financial position. Sorry. These are the activities that we know that fall under working capital. You know, trade and other receivables is under working capital. Inventory is under working. So I'll copy it down so that so that I can understand what I need to do from time to time. So what other aspect of the balance sheet that I have not covered? These aspects is not under operating activity, so I'll still touch base on it. But I won't touch cash because cash is what we are trying to arrive at. I'll go down. I have loans. I won't touch loan because this is a long-term loan. Trade payable, though the statement says non-current, but it's better to state trade payable as part of working capital. So it's part of the movement in working capital. Then the next thing to do is to look at the tax paid, actual tax paid, and also interest paid, interest received also received. Okay, that is operating activities. So I'm still continuing going down. I'm going to investing activities. That is cash flow from investing activities. Don't forget, I said investing activities involve a long-term investment in assets like property, plant and equipment, or investment in subsidiaries. So I'll go up again, sorry, in the balance sheet. I'm trying to cover every aspect of the balance. That's the way you can prepare statement of cash flow to balance, otherwise it will not balance. So I'll copy it down. Mind you, the only thing I have not copied, since I've been copying here from the assets, is this cash. So I'm still reminding you that. Then I'll go to that is financing activities. That's the last part of it. Financing activities. That is cash flow for financial activities. Cash flow from financing activities. So what are the financing activities that we have? We have loans. Don't forget. We have loans. We have shares. Copy both of them. So now, since I have this, I'll still format it to look really good for us. So that's for now. Let's leave it the way it is. So before I do anything, so I'll now compare. I'll do a comparative review of the statement of financial position. So the opening figure minus, so like the changes, what are the changes? So opening figure minus closing figure, that's what I'll do. I'll do that for all of them, including cash. But when I get to liabilities, I need to put negative because you know it's liabilities for me to be able to test that what I've done is right. So, and also down. So if you look at it, if I do a sum like a check, this will be a check. Let me just highlight it in green like a check. It has to be 0 check. That's where it's starting from. Sum, what am I adding up? Adding everything, every single thing. So from here down, it has to be 0. Otherwise, yeah, can you see 0? So this means we are in the right track. So the next thing I'll do, I'll now come here. What is the profits after tax equal to? So based on statement of profit or loss, I have my profit after tax as 51. Let me just format this. This is in dollars. So I won't add depreciation and others. I won't do that for now. So I'll look at the movements that I have, trade and other receivables. That's where it's starting from. What's my movement in trade and other receivables? This is it. I'll put it down. Inventory. I'll put it down. Trade payables. I'll look for trade payables. Trade payables. Yeah, this is trade payables here. Yeah. So I won't do anything on the interest paid for now, but tax paid, because it's also part of the movement that I have. Anything that we have movement for in the balance sheet has to come here. So like tax paid, I think I've covered trade payable. So another aspect I haven't covered is yeah, all this property, plant and equipment. I need to bring them down. Yes. Then loans, I need to bring it down. Loans. Yeah, that's it. So ordinary shares, I don't think there's any movement, but let me check. There's no movement. So the only one I didn't bring down is the retained earnings, but also if you notice, the same value that you have for profit after tax is still what we have as retained earnings. So we are still on the right track. So if you let me do a sum of all this, then we'll know whether we are still much on the same page, on the right track. So total, let me see, total cash flow from operating activities. So sum all of them from here down. Yeah. Yes. And we have let me differentiate this. Start a line. This is from financing activities, investing activities, sorry. Cash, total cash flow from investing activities. So it's looking like a proper cash flow now. Total cash flow from financing activities. Sum all. Then have this. So net cash and cash equivalents. So I'll sum up all these categories of cash flow. Operating activities plus investing activities plus financing activities. So opening cash and cash equivalents. What's the opening figure? If you look at it, opening figure is the figure that was coming from 2022. So this opening figure is $1,200,000. So what is the closing figure? Closing cash and cash equivalents. So if you sum it together, it should equal to what our cash is. So our check is still correct, but we have not completed it. So if you check it with this in the statement of financial position, can you see it's true? So it's correct. So let's move on. We now need to start passing those journals, but I'll strongly suggest that each journal should go on individual column, on a separate column. Any of the addition, like this adjustment for depreciation, the question says depreciation on property, plant and equipment for the year was 1,500,000. So 1,500,000, we're adding back depreciation because it was already part of the G&A. So we say let me tag it as depreciation. Yeah, that's the best way to do it. So add what? Add 1,500,000. Then, like we are posting our double entry, so we need to find a way to adjust it. So depreciation will be taken off from property, plant and equipment. So this is a purchase of property, plant and equipment. So there's something I'm trying to do there. Purchase of. So there could be disposal, that is proceed from sale. Proceed from sale of PPE. So that should be another line. So that is the first journal I passed, and that journal should always be, my approach is to make sure that it's equal to 0. So my journal from here down should be equal to 0. So I'll put the check there. That journal is complete. Okay, another aspect of the journal is we said we are adding back interest expense. Is there anything like interest expense in the question? Yes, there's interest expense here. If you see it very well, you see that interest expense is $7,500,000. So interest expense, like I did for depreciation, I'm going to do another column. Interest expense. So interest expense to I'm adding back. 7,500,000. So where am I adjusting it? I'm assuming that that interest expense is what was paid. So I'll adjust it here. So the next one is to look at income tax expense. So if you look at it, income tax expense to income, or let me say tax expense. We're also adding back. How much is it? $8 million. So the next one is interest income. Interest income. Now we are deducting interest income because it was already added as part of the income. So yeah. Now we're putting it back here, interest received. There are more other complicated questions, but this one is a very straightforward one, so we can make those adjustments easily without impacting other aspects. So I think there's still more that we haven't done. There's still more. Depends on what the question says. So now we have this. The question says property, plant and equipment which was valued at $2,500,000 was disposed of. Here, if you look at it properly, you see that there's a profit on disposal here. This is a cash proceed that we receive of 3 million, and this is 2.5. So that profit on disposal should have been part of this cash flow. So we also need to look at the profit on disposal. So insert this profit on disposal of PPE. So the first thing we need to look at is how much cash was paid, because that cash would increase our cash flow. So disposal, let me just put disposal here. Asset disposal. So that disposal will have increased, that is the 3 million cash will have increased this. Then we need to adjust The 3 million, yeah, that's a negative. And it's 3 million. So that is not all, because if you look at it, they said it was valued at 2,500,000. So how do we now post that 2,500,000? If you look at it, that 2,500,000 is what will make us achieve the profit on disposal that we mentioned here. So that profit on disposal that was already part of our profit after tax, so we need to adjust it back. So how do we adjust back? By adding the 2,500,000 here. That's one part, and also adjusting it, that is negative 2,500,000 against property, plant and equipment. So if you sum it together, all aspects should be 0. So let me do this. Yes, all 0. So what I will now do is I will now do come in, wrap this up, wrap text, format, wrap all this here. So adjust. Now we need to adjust every single thing. Here we have this plus sum of all this. So I'll do the same for all of this. So if you look at it, our profits before tax, where we are supposed to start from, will have to be this. So then I'll adjust others too, the same way I did for the others. I'll have to sum all of them. So what is my cash flow, total cash flow from operating activities? So let me see if the formula is still right. Yeah, it's right. So then we do the same for all of this. That is cash flow from investing activities. So what's our total? Yeah. And also for financing activities. So what's our total? This. Then net cash and cash equivalents, how much is it? Hold it. But we make sure that all aspects has been correctly entered. So let me sum this. Okay, this is correct. This is correct. Then what is the opening balance? That's it. We'll slot in. You see that our cash flow will always balance. So even if the question is so tough, just follow this approach, and with this approach you will be able to solve the question. The other aspect that we also need to be looking at in terms of cash flow statement is when we have a consolidated cash flow statement, when we have a holding company and subsidiaries. It's slightly easy when the subsidiaries are in the same currency, but when the subsidiaries are in different currency, you have foreign currency translation reserve, so which also impacts the movement in cash and cash equivalent. So I will be doing another video, separate video for that purpose, to look at consolidated cash flow statements that has foreign currencies.